rates today are in the threes for the most part, aren't they, Joe?
Sure.
For a 30-year mortgage?
Yeah, somewhere in the mid to high threes. I think in Arizona and probably probably Nevada as well, the interest rates don't necessarily drive the market. Maybe they help a little bit, but in our places, people are coming here for the affordable housing, not necessarily affordable interest rates. Now, in a Northern California market or Southern California, somewhere in there, whole different story. When those rates go lower, people can afford more house. They can get into those houses because they need that buying power. The interesting thing, we talk about where do the interest rates really come? So the reality is everybody hears about the Fed funds rate, right? Everybody hears the Federal Reserve has cut interest rates. However, interesting to find out that mortgages are not directly tied to that indicator. So yes, that would come down, and I can tell you the number one question I get as a mortgage broker is, hey, I heard the rates are lower, but it may impact it a little bit on a small percentage, but the interest rates are really derived by what's going on in Wall Street. It's just a function of where the money's going. So when the money is going to what's called a mortgage-backed security, when people are buying that makes our rates cheap, and when people are leaving that makes our rates go higher.
I saw on the Wall Street, right? Aren't we at like 28,000 points or whatever? I thought that right now we're in a place where it just doesn't seem to make sense because the rates are lower, but yet the stock market's been taking off. So that doesn't really equate with what you just said, Joe.
None of this makes sense. I think a lot of people are scratching their heads because if the stock market is at an all-time high, right, which I think it is, we're setting it almost daily. Why are we lowering interest rates? Why is the Fed fund rate going lower? That's usually motivation to drive the stock market. Is people are trying.
So we should be seeing the rates going higher, right?
We should be seeing the rates going higher, or they're making it attractive to borrow money by reducing that rate. So they make it attractive to borrow money, and in theory, you're borrowing money to put it into the stock market.
Last week or the week before, Joe, you can speak to this. I saw a bunch of emails talking about Fannie Mae raising their limits. What does that mean, and what are those limits, at least here in Maricopa County, Joe?
So every year they come out right about this time and they decide if it's really about having affordable housing. It's a process of determining what the loan limit will be for a conventional loan, which is predominantly the loan that most people get, especially in this area. But again, it helps out California and higher priced markets as well. But in Maricopa County, our conforming loan limit, which is generally speaking what most people get, your typical vanilla loan, is going to be 510 400, and this is actually in place right now for a lot of lenders, including the ones that I use.
Oh, so it already happened. It's not something next year.
It's officially happening January 1, but we're doing loans right now at that 510 400 mark. So traditionally in the past you would be in a jumbo loan, which carries a whole different set of parameters. But going forward, you are a regular conforming loan at 510 400.